Hey guys, welcome to Startup Steroid. Today I'm interviewing Christopher Hussain. He's the founder and CEO of RealKey. Uh, this company is in the process of raising $3 million for their late seed round, and they already have commitments for about 2.5 million and have 5 investors who are doing the due diligence on their final 500,000. So if you're interested, you might want to act quick on this. Um, just to give you an idea, I recorded this interview a couple of weeks ago, but yesterday I reached out to Christopher just to see if there were any updates for the company, and this is what he sent back. Since doing the interview, he's added 5 new people for design and development team. He's added 3 and possibly 4 additional staff for sales and support. And he's also hired a new marketing agency and has 6 dedicated resources for RealKey. So this is how fast this company is moving. It's really spectacular. So I'm really looking forward to this interview. But first, a quick disclaimer. This interviews are not recommendation for investment. If you do choose to invest in this company, I suggest you conduct a full and thorough due diligence. And this interview hopefully acts as the first step in that process. If you are an investor, please email me, get in touch with me. My email address is on screen now. It'll be on screen again at the end of the interview, and it's also in the description below. Send an email, and I'll reach out, or someone from our team will reach out, and we will be happy to answer any of your questions, or put you in touch with Christopher directly if you require that. And if you are an entrepreneur and are looking to raise capital for your startup, please get in touch with us through our website. Our website is startupsteroid.com. Click on the founder button and fill out the form so we can get you added to our network, and maybe you can be the next guest on these interviews. But having said that, let's get to the interview. Hey guys, so I want to welcome Christopher today. I've been really looking forward to this conversation because Christopher has a really interesting background, and we'll get into that. But he raised a round, so he's sort of a success story from that perspective about 1.5 to 2 years ago. And then now he's essentially raising a second round to scale his product. So we're going to touch on all of that today. But Christopher, welcome. I want to first introduce you, get to know you a little bit. So please give us a quick background and tell us a little bit about your story.
First, a little bit about RealKey. It is a mortgage-based technology. What we're doing is envisioning how you get a mortgage by automating the processing and underwriting, essentially the documentation, collection, review, and communication amongst all the parties. So it kind of makes sense. My background is as the top mortgage originator in the U.S. for 2 straight years. I'm also one of only a handful of people to have held a license in all 50 states. I was national sales director for one of the largest mortgage brokerage franchises in the U.S. Before the housing crisis. And my last company, Syndio, was an online brokerage. It was venture-backed. We raised about $50 million before it was acquired by an internal investor and is now part of Freedom Financial. So this is actually my third venture-backed startup as a founding member. And so I'm really excited to be here.
Fantastic. And yeah, you have a really interesting background. You were, I think, number 1 mortgage originator, right? You said, tell us a little bit about how what that experience was like, and being number 1 in the country obviously must have been very rewarding. So I want to know a little bit more about that.
Rewarding, and it's also very tolling. So everybody knows getting a mortgage and what it's like, and that it's really frustrating and hard to get it, but you have to look at the back end of things and the person who got that done. So even if it was frustrating for you or if it was easy for you, your mortgage person that was on the back end, the loan officer, the loan originator, the processors, all made it as simple as possible. And so a lot of really endless nights, working through holidays, trying to get all the right documentation, all the right information together. And really juggling so many different parties and everybody's in different systems. And so, quite honestly, I'd say it was the most rewarding was my biggest month ever was actually the last month I did mortgages, was in a month of December. And I remember it being Christmas Eve, and I'm in my office. The entire family's out enjoying the holiday, upset at me because I'm working hard to make sure that all the real estate agents and these home buyers are going to have a happy holiday. But obviously, it's very tolling, and these transactions are all, potentially trauma-inducing. So it's enough to give really any loan officer PTSD, to be quite honest. And
Right.
that's what I'm hoping to solve for with this product that we built.
Right. That's actually a perfect setup for starting your own company and solving that problem that you saw firsthand, but also perfect setup for the entrepreneurial life, right? That you're sort of walking into. So tell me about RealKey. And I know there is sort of the first version, or we'll call it V1 of the product and V2 of the product. We'll get into the distinction in a minute. But tell me about that V1, like that initial idea. How did you get started, and what was the vision at that point?
I think that it's always been part of our vision, really collaboration amongst all the different parties involved. I think that it's a different approach to mortgages. When we first did that product, and it still exists today, and we still have plenty of paying users on it that love it, it was more focused on taking a better loan application. So it would allow users to go through and, without installing software or using video, to be able to see as someone would type, another person would type, would contract and expand different potential requirements and questions based off of what was entered. And so it's really cool in that aspect. So it allowed you to take a more complete loan application, which is, I think, very, very important in going through and having a smooth process and being able to set proper expectations. What was interesting, the aha moment, I have to give a lot of credit to Alan Tifford, our user design strategist. And he was the TurboTax design lead and Intuit's principal design strategist. So he was always deciding what products they should build, the user research behind it, why should they build it, and then making sure it was built the way that it's envisioned. Well, he came on board and he looked at that product and said, I think we should stop here. I want to do one thing with you. I want to take a loan application. Okay, so we did that. And he's like, all right, so your name's Christopher Hussain, right? Yes. Okay, stop right there. I can't take you at your word for it, even though I know you, I've met you, everything about you. You need to give me a document before I can fund your loan. Why am I even asking you what your name is? Why am I not just having the document go through and to complete the loan application? So that's when we, with the new product, we're really more focused on the documents themselves. We call it a document-centric approach, where our vision is that you can eventually come in and the documents will fill out the loan application, and then eventually determine what the loan product is best for you, and even eventually what lender is best for you based off that. And at that point, we've got everything that can go straight to the lender, and they just have to fund it. So it's literally the most efficient, effortless, and enjoyable way you can possibly get a mortgage. And this is the first step towards that vision.
Fantastic. So the just to understand the product a little bit more, instead of the usual filling out the form and writing in all of the information, now you're focused much more on uploading the right documents, and your system essentially takes that and fills in the application automatically.
Exactly. So no matter what lender you use, you can do that. So we took a very mindful approach for our initial product that we're launching with, and kept in mind that in an industry that is typically very far behind where it should be, and there are products that exist, we didn't want to go through and step on a lot of toes. So right now, the way the product exists, it fills in the gaps of those current products. So the loan origination system that the lenders or brokers use, their point of sale systems that they use to intake the consumers, and this documents that those capture the gaps there. So what we decided to do is that looking after a loan application's been taken, credit's been ran, basically the lender and consumer agree to work together. We have the lender export the loan application data to our system. It then figures out what documents are needed, who they're needed from. We invite them into RealKey. as well as who needs access to those documents. We also invite them in now. We can chat, communicate, single space, access those documents without having to call or email each other. They can even chat in there, so they're not having to even pick up the phone. And then we facilitate getting the right documents the first time, as well as using APIs and OCR. So we're going through getting them direct from the source and triggering additional items. And that's really a big key. Nobody's done this before, where they've gone through and detailed out all the finite possible conditions and document requirements that exist. And then once they're all triggered, now we stack those and put those together for the underwriter so that they've got cover letters that explains what was obtained, what wasn't obtained, what the summary of it is, what was triggered, so they see that we were foresightful and they don't spend hours and days. Instead, it takes minutes and really allows them to get through the process that much faster, cutting down the entire closing time by at least 50%, while at the same time increasing the likelihood that a consumer is going to come back to them by at least 2x. So it really has a lot of impact on our end users, which are these lenders and brokers, processors, underwriters, and their managers.
Right. No, that's so true. Having gotten a couple of mortgages myself, I know the process. And most of the time you fill out that initial application, you hand in maybe a couple of documents, tax returns, et cetera. And then they come back to you with, okay, we need these four more things.
And
okay,
we need this, and we need that.
And then a week later you get, we need more items. And, so you're going back and forth for essentially the first couple of weeks, if not the first month.
If you really want to screw yourself, do it on a Friday or on Friday that's leading to a holiday, because then you don't just get that 3 days, you get the fourth day as well. And that's why that December I was talking about was so horrible, is that you've got all these holidays mixed in there. It doesn't matter whether you're Jewish, Catholic, Christian. There's something that's going to totally screw that loan over and make it take longer. It's better. Somebody's taking an early vacation. The underwriter took off 2 or 3 days early, and you're just like sitting here like, oh my God.
Right. No, I completely understand the problem now. But so I know a lot of people are probably going to be thinking about this, but aren't there other players, competitors in your market that are already doing this? Rocket Mortgage comes to mind. There are a couple of other players like that. How do you stack up against those? Tell me like how you're better than them.
I wouldn't say we're better than them because we're not competing with them.
Okay.
When you think about Rocket Mortgage or Blend is a good example.
Mm-hmm.
They're very well known. They've raised a substantial amount of money to basically be Rocket Mortgage if you don't want to build your own Rocket Mortgage. Well, Rocket Mortgage, what people misunderstand about it, and this is again just because they only know what they see on TV or what they've used, they see the front end of it. That's exactly what it is. It's a point of sale. It allows you to take a loan application, and there are integrations for your bank account. They're usually pulling this through systems like Yodlee, Plaid, or Quova. And so it is storing it, but it's storing it like a box or a Dropbox. It's not reviewing those documents and, again, triggering those additional items, those conditions. It's also not inviting in all the different parties. It's just consumer and Quicken, or consumer and whatever lender's using Blend. And the documents that they obtain are very generic and cookie cutter. It's not getting into finite details where you upload your bank statement or it gets your bank statement data and it realizes, there's a deposit that wasn't income related. Well, I sold a motorcycle. All right, great, you sold a motorcycle. Okay, well, guess what? That now, if that's needed for you to qualify, you now need a letter of explanation. You need to source it showing an invoice. You need to show proof of ownership. You also need to show Kelley Blue Book value, because if you sold it for 15 grand and it was only worth 5, that's money laundering potentially. So these are the things, and this is why the U.S. Can do such risky loans, is that we've really done a great job of de-risking our loans to a point where we're comfortable doing these high loan to value or low credit score loans. It's something that a lot of other countries can't do. And this is also something where I think that RealKey can have a social impact, in that by going through and look at the fact that most government loans and down payment assistance programs are meant for people who need them, who have low credit scores, who are low income, or can't put a ton of money towards the homes. A lot of lenders don't provide these or even tell consumers about these options because they have a lot more documentation than your everyday loan. And the lender, in many cases, makes less money on those loans than they would a typical loan. It's like, why would I give those? Well, if RealKey can go through and automate that, we see a lender as being more likely. It's like, why not provide it? I can get more consumers to come in, more business for me, and it
Right.
doesn't take me more effort. And so at that point, we see ourselves as even potentially being able to decrease that class and income gap for homeownership and even help out in the future other countries. We went to Hong Kong and won Hong Kong FinTech Week, and we won the Alibaba Global Pitch Competition for North America. And this was because we went through and they saw that this was not just a US-based problem. This is something that could be easily customized and used in other countries.
Fantastic. Yeah, that's such an important point that, you know, when we talk about the mortgage market, we tend to focus only on US because the regulations, all of those, you know, the back end stuff that we generally don't consider are so different in other countries, especially Asian countries. And to have a product that can potentially go into a lot of different market, I think is a huge plus.
Yeah, it was really interesting when we did go to Hong Kong. We were invited out by Invest HK, which is ran by the government there. And they put us in touch with a lot of different banks and brokerages and real estate agents, really allowed us to learn a lot about how it differentiates from here and there. And when it's very similar to, I did consulting for the first brokerage in Switzerland, which was one of the first investors for Syndio, my last company. And what I found interesting, if you go to other countries, they don't do these high loan to value loans. And you look at the US and say, oh my God, you guys give out way too much debt, which is true.
Right.
But at the same time, we can do that because we've de-risked it so much. Now, if we were able to show and implement a lot of these processes and operations, they could do the same thing and feel a lot less exposed to risk by having these checks and balances. And so that's where, you know, Dodd-Frank, you know, yeah, it made getting a mortgage more difficult, but it also ensured that we didn't lose that access to funding, that access to money that's needed to really spur the economy and really push it to the next level.
Right. No, so important, so important. So give me a sense of the timeline now. You started this company, I think, back in 2017, and then the V1 came out, I think, late 2018. So just walk me through that timeline and where you are today.
So it actually launched November of 2017. We started the company, or I started the company back in July of 15. So it took a while to get to the initial product.
Got it.
Obviously, fundraising involved, building team, all the typical trials and tribulations of doing a startup. And so we launched with that, and I'm going to be honest, we actually ran out of money on day one. And I had to furlough the whole team. So that was lessons learned from the last company, Syndio, was that, they definitely spent money a lot faster than I would like to, and I still see that being a Silicon Valley mentality. Spend whatever it takes, raise it at the last second when you've shown the most traction. Don't worry about profitability. Those are all things that I've learned. Don't do those things.
Those are not good ideas.
Those are not, especially after COVID. All of a sudden, everybody's like, "Yeah, what we were telling you to do, we shouldn't have been telling you to do that. You did the right thing." So we did that. We furloughed the team, and that product grew really quickly, actually faster than we were able to keep up with right on, especially since we were building on a fairly low budget. Figured we would fix it later on. So that launched, did great. Don't raise money during the holidays. Nobody wants to give you money in November, December, January. On top of that, they want to see not only that you've realized revenue, especially with a SaaS product, they want to see that people renewed and that they didn't churn. So it's usually about 1, 2, and maybe the third month is when they're like, okay, all right, I think that this is good. This is solid. You've de-risked it. That's when you start getting a lot of looks. And then that was when we had Alan join the team, and that was when we started thinking about doing the pivot. And we raised about $1 million through August of 18. So $1.5 million at that point. By then, we were getting fully into, I think we're going to go through and we're going to pivot. We finalized on that at that time. Went through that over the next year or so, a year and a half, finalized on that. And then now we've got the new product coming out September 23rd and closing out this round, which will give us a total of $3 million raised to date.
Fantastic. So I'm going to ask you about the pivot and, the change that you made, because that's a big lesson for all of the entrepreneurs and anyone who sort of wants to start their own company, because they have to be ready to change directions. But before that, tell me a little bit about the process. You are a success story since you raised $1.5 million.
I wouldn't always say that, but I'm always very humble about those kind of things. Thank you.
But no, I want to learn about that process and sort of what that experience was like. Again, it wasn't the first time you've gone through a capital raise, but I think it might be the first time you sort of were the CEO of the company. You were, the top of the spear kind of thing. So what was that experience like? And, those months raising $1.5 million?
A lot of it's like selling. I mean, really at the end of the day, when you're doing fundraising, it's a lot of numbers. Having the right connections obviously makes things easier. Coming from the right university, which I came from UC Davis, we don't have an angel alumni group, so that's a little more difficult. I didn't come from McKinsey or PricewaterhouseCoopers or KPMG. I mean, these are like the typical trigger points that make fundraising a lot easier. Nor do I come from a very wealthy family either. This is I have very good parents, very smart and intellectual, but the money didn't come from them. So very difficult. Right. I learned how to pitch the hard way. So coincidentally, one of our advisory board members invited me to the first pitch event that he was hosting. Went to that and embarrassed the crap out of him and myself. I didn't do a very good job. I couldn't do the pitch in the amount of time. They gave me extra time. I was stuttered. I was nervous, twitching, fidgeting. They asked questions. I told them I had to get back to them. I told them, I don't want to tell you that. It was all the typical mistakes that most entrepreneurs make when they do their early on pitches. Right. And now I'm advising for people on this because now I'm winning pitches. If I go to a pitch competition, usually we win. So yeah, it was through that, and even doing that and failing as many times as I did, I realized I needed help. And so we actually went through, and this is not a sales pitch for them, but we went through the Battery in Berkeley. I liked them because for me, I didn't want to give away a ton of equity, which most of the tech stars and 500 startups and Y Combinator, those are great companies with a really good background behind them. But of course, you have to pay with equity to do that. So that was why I went through them. I liked them. They had investor advisors. And so you work with these advisors. And over time, eventually my champion, who I work with the most, ended up finally saying, are you ready to raise yet? Because I wasn't raising at the time. I was using my own money. So that's another suggestion. Always make sure you've got a decent chunk of your own money to spend. So put quite a substantial amount of money into the company already. And so he finally invested, set the terms. I'm going to be honest, I had two people I was considering, and he was higher, so I chose him to set the terms. And he invited in at that point the rest of the investor advisors from the Battery, who a lot of them are ex-Sandhill Angels people. Mm-hmm. They then invited me to Sandhill to pitch. Then that meant an introduction to Band of Angels, somebody that was there, invited us there. Right. Then that led to Angel Syndication Network. And then Lubbock Angels invested, and then it just kind of Pasadena Angels, and we got a lot of angel groups. It wasn't until National Association of Realtors invited us to be part of their accelerator called Reach, and they have an investment arm called Second Century Ventures. When we got invited to that, and NAR is investing, and Second Century Ventures is investing, that was when we really raised the most amount of money, was that people kind of saw that as adding clout. And okay, you've got, a table at the metaphorical, you got a seat at the metaphorical table. Right.
And that's so important, that process of, what a lot of entrepreneur startup owners, what they struggle is that, where do I find these angel groups? How do I get in, get my foot in the door? How do I make that first introduction? And it's really to go to these pitch events, and all you really have to do, like you said, is convince that one angel. And once you do that, now, they have friends, they have other groups that they're associated with. They can start to help you connecting with all of those groups. And you keep selling, you keep convincing more and more people will show up and sort of push you along the way. So that process is so important. And thank you for sharing that experience. So now you've raised $1.5 million. Now you have the V1 of the product. I understand that, I sort of went through the due diligence process with you, so I sort of learned a little bit about your company, but I understand that you had to go through that major pivot. And in the process, you ended up changing your CTO. You ended up developing the V2 of the product, which is coming out end of September now. Tell me about that process and what that transition was like.
Which part do you want me to focus more on? The actual pivot, the hard decisions around that, or the CTO situation, which was a completely separate situation in and of itself?
Okay.
It had nothing to do with the pivot itself.
So let's go one by one, right? Let's go through that first pivot when you realize that, okay, V1 of the product is really not as robust as you'd like. And now you have to sort of transition into the V2 of the product. What was that transition like? Let's start there, and then we'll get into the specifics.
Well, I think it was a tough decision for us. Unfortunately, part of our internal culture is, and it's also part of how my relationship with my wife is. It's actually our 10 commandments. Number 1 is be logical. Basically, every other commandment underneath ends with go back to number 1. And so I'm fortunate that our team is really smart, but they also are very logical. Nobody gets, attached emotionally, which is very difficult. I mean, we do, but then we go back to commandment 1.
Right.
And we're also fortunate, again, to have, I give a lot of credit to Alan. And he, and it shows in why he was, as influential as he was with, the teams and products that he's built in the past. He's very process oriented. And when we were suggesting to go through the pivot, he was mindful. He said, look, if we go through the process and you decide that the original product's the one that we should build, where we should put our money, fine, I'm good. I'm on board with you and I'll help you do that.
Right.
If we choose to, same thing. Of course, I'm on board. Now, if you don't go through the process and you just decide to stick with one, or you don't go through the process and you're like, screw it, yeah, let's just go with number 2, I'm out. So we went through a very long process, substantial amount of research that's all been documented, a lot of research companies that we got involved with as well to make sure that, and we also built an MVP initially, an MVP, like super minimum viable product. And when we showed it to people, it was really interesting in a way that we went through our questions and answers with them and really had them come to the conclusions on what features were really necessary for them to be willing to pay us the monthly fees that we were wanting and that we had. And there were particular features in there that were necessary and ones that were not, that we've been able to postpone. I think that's what's really interesting about software is you can't build everything, especially in mortgage. Everybody wants this integration, that integration, or integrate with my system. And it's being able to take a step back and say no, and then explain why, and have them kind of incept that into their minds. That you're right. I don't need to be in my loan origination system and have you be a drop down when all I have to do is drop down, export, rate, import RealKey. Like, okay, right. You did 1.5 extra clicks. Do you mind if I now focus on improving the product better, focusing on income, assets, and credit, and making it more impactful for you? And they're like, yeah, I actually would like that. Great. Well, how much would you pay for it if we hit at least these key features? Right. And we found that they were willing to pay not only our monthly, but 3 times our monthly, and even per transaction that amount. So we know that we're at a fairly discounted amount, which allows us in the future, as we add features, to grow. And obviously, we're going to be increasing additional revenue streams for that. So I think that's what was interesting about that pivot.
Fantastic. Okay, so now let's talk about the changes on the team that you had to make, the transition from one CTO to the next. And by the way, I understand that the old CTO is still part of the company, still has equity. So this is not to badmouth anyone or to, it's
no.
change in strategy.
I don't want, and I'm glad that you brought that up, because in no way it wasn't meant to do that. It wasn't a good fit. We decided that in a mutually agreeable way, and we really have made a lot of stride with the new head of engineering.
So let's talk about that transition. Tell me what was that what was the change that you had to implement? And to do that, you had to make that change in the team.
Well, I think that part of it was that he had also been through quite a bit with us. He had been through the running out of capital and then going through a pivot and a lot of different things. I mean, he got us to where we were. And so there was some situations that were negative and that I'm not going into detail on. But at the end of the day, I don't believe in burning bridges. And so we made sure and said, look, you really did help us out. And so I'd still like you to leave here with some equity of what our original agreement was. And that way, when we need your help, when we need to, lean on you, or when you talk to other people about RealKey, you have nothing but good things to say about us.
Right.
And I think that's really important. And that's something I think many leaders and many of our investors, I also would say shame on them too, because you don't burn bridges. And that was all I heard coming out of people's mouth. It was really made it difficult for me too, to go through and to handle that. And once we got done though, we took a step away, got some time between it. And this was while we were finalizing and everything. It also helped us because we're going through this pivot to identify what the ideal person was for us. And our current head of engineering locked me in. It's outstanding. I mean, super efficient, always, prepared. And as you mentioned, you were going through diligence with us. You grilled the crap out of him. I mean, that was 2-hour architectural review. No, I really wish I had recorded it myself because it was outstanding. And the good thing is he had answers for it. And that gives me confidence as a CEO, knowing and seeing things and seeing that he's thought about this and he knows about this, to see all that.
Right.
Yeah.
Yeah. No, I think the CTO you have now, I think, is fantastic and is doing a great job. So,
I'll be glad to hear that.
and that's great for, from an entrepreneur perspective, when you have that founding team or, the team that you worked so closely with to create the MVP or create the version 1 of the product, and now you have to change. That's such a difficult transition for so many people. So the fact that you went through that and are now, on version 2 and are developing that product, I think in my mind, that's just a huge plus because you've learned that lesson. Right. And with a lot of entrepreneurs, they come in with the mindset that I know everything and I'm not going to change my mind. And that usually, is the beginning of the end.
That was the 26-year-old me I want to kick the crap out of that thought he knew everything. I mean, we all look back 4 years and look at ourselves and was like, oh, that cocky little son.
Right.
Yeah.
No, that's fantastic. So tell me a little bit more about version 2 and what you're doing now. And I know that you have a really interesting strategy as far as pre-selling the product even before launch. So I'm going to get into that also a little bit. But so tell me about V2, what the additional features are. You said it's launching September 22nd. So how you're
23rd,
sort of working 23rd. So how you're working up to that.
Yeah, I mean, for us, what we were looking at is that we wanted to add some additional capital to give us additional resources and dry powder going into this launch so that we can really accelerate quickly. We know that we've got a first mover advantage here. We want to take advantage of that. Our goal is really in the next 12 months to become an industry standard as quickly as possible. So with us raising capital, especially in the middle of COVID, these are lessons that we actually were lucky enough to learn from our advisors at our first launch. So we did the same thing you're alluding to, and I'll get that in a sec, which is that we saw that investors look at us and say, look, you're not launched. I don't want to invest until you've launched. Okay, well, how can we de-risk this? Well, we've been pre-selling. Pre-sales don't mean a thing. You can have somebody sign up with an email and a name, like, that doesn't do much for you.
Right.
And so at the end of the day, we pushed harder and said on our users, well, we actually want your credit card. We're not going to charge you any money. And we're very clear writing if any of the loan officers have signed up and our managers can see we're not charging you until launch and we're not even charging you at launch. We're going to give you a free trial. For us, it's only 7 days because we know that lenders and loan officers very quickly decide whether the product works. And if it works, they're good. If it doesn't work, it's a little more difficult to get them back. So that's why we've taken so long to get to this launch, is to make sure all the features were there, they work properly, and that we've got a really good launch product. So yeah, we've got credit cards in hand, not only their names and contact information, but even their entire staff that we're going to be onboarding as well. And then we've also get from them what lenders they work with, we get what third parties they work with. So we get quite a bit of data, which is very valuable also for our focus on future features and channel partnerships and expanding the product from there.
Fantastic. And we're not talking about 5 or 10 people. We're talking about several hundreds of people that you have in your essentially, right, pre-sale list, and you'll give them a 7-day free trial. Now, are these people also involved in the sort of the product development process? Have you shared sort of screenshots or basic functionality with them just to get their feedback and see if you are on the right track?
Absolutely. So the way that we did it was, we started with our initial user base on the original product, made sure that they knew what we were doing, were involved in the product development of this V2 of the product, and said, look, if we were to sunset the old product and use this instead, are you willing to continue paying? What features are missing, if anything? So they were very instrumental in getting to what we built. Then we went through and we had people who were waitlisted too. Those people, include them also in the conversation. Now, since then, we've also started adding on new people. So actually, the cold calling, the marketing, funnel marketing, all this such, and have been growing about 50% month over month the last couple months to get to where we are today. And I think that's what's really interesting, is that we've been able to, by showing them what we're building, how it works, screenshots, everything, and really getting them to see it in their mind, what's going to be live at the end of September, and then get them to say, yes, I want that. I will put my credit card down. I will agree to the contract, and I'll even give you all the rest of our users. I think that's pretty powerful.
Right.
I can't do much more to de-risk it until launch. I think that, with our raise, we also priced ourselves fairly aggressively to make sure that there was less friction for that as well. Now, post-launch, once we've realized that revenue, that's why we've saved a last tranche of the round to be raised at a higher valuation based off of the revenue that we will have realized at that point. And we expect to close that out really early in November, once we've shown the September revenue, October renewals, and now we're into November. We see it hopefully going very quickly at that point.
Fantastic. Yeah. And that's such a great strategy, even for investors, where, okay, you can sign up just before or just after the launch, and just before you'll get a slightly better deal than just after. And that's such a smart way of sort of playing that. And I think I just realized that September 23rd, 7-day free trial. So the first billing date is essentially October 1st.
For us, it's actually the 30th is when they will get charged.
Okay,
and for us, we've got our system set up where usually we do everything in a batch bulk to our banking account, so we could show it on our P&L, our balance sheet, and profit and loss. And then that allows us to show September, then October, end of October, we'll be able to show on the 31st, again, leading into November.
Fantastic. Okay. So for the investors that are listening, we'll have the financial models and everything in the deal room, so they can certainly either get in touch with me or get in touch with you directly and go through that. But just sort of high level, I want to get a sense of where your revenue is, what that V2 launch looks like. So are we talking about 50% increase? Are we talking about 2x? And where you expect to go by end of 2020 and then 2021? Give us sort of a sense of what that progression looks like.
Yeah, so we're growing fairly quickly. With the original product, we are expecting the launch to be triple that. We're growing about 50% month over month. And then between launch and the end of the year, we've got some fairly substantial contracts. And if you look at really, I think that's what's great about our product is that when you look at the offices and the corporations that we're selling to, we're really focused on franchise brokerages because usually the owners of each office or the branch managers of each office are the owners. So they can actually decide what CRM they use, what pricing engine, what documentation, what RealKey they use. And so we can have that meeting with them and literally walk out of a 45-minute Zoom meeting with an entire office. They're part of larger corporations, and we're talking thousands of users, paying users from each of these. And so it really only takes one for us to hit our year-end goals. And so we're fairly confident in these numbers that are really going to help us move very quickly to becoming that industry standard. And we've got some great partners taking part in an accelerator with one of the top banks in the US. We've also got some connections through the Mass Challenge that we're taking part in right now with some other top tier banks that we're in early conversations with. And those are going quite well, as well as adding on, we just added on a couple investors that have direct connections and are decision makers, in fact, with some of our key targets for these enterprise franchise brokerages.
Fantastic. Fantastic. So just, we didn't talk about this before, but just to be clear, your revenue model essentially is you're charging per user, and then for RE2, you're going to charge per deal also. So when you talk about, you can go to one office where it's just one user, and that's your, revenue, versus an office where you go talk to the manager and then they might have 20 users underneath them. So your revenue is essentially 20x that. Is that about right?
So to clarify on that, it's close. So we've kept the same actual business model. We charge right now $99 per month per user. That's a loan officer, processor who usually collects the documents, creates the legal disclosures, and communicates with underwriting, with the underwriter, and then also with the manager of the office as well. And there could be multiple managers in there. Typical office for us is around 50 individual users. So walking in and walking out, we could walk out with anywhere from 60 to 200K in annual recurring revenue, just based off that. Now, we do have additional feature sets we're going to be adding that will allow us to feel confident in charging per transaction fees. We'll be helping more with pricing, decisioning, things of that sort through particular integrations that communicate with our system. At that point, that will give us an additional revenue stream. The average individual user typically closes about 3 to 5 transactions a month. However, they take anywhere from 30 to 100 applications. And we do plan to charge more so, not necessarily based off the application, but success-based applications. Right. And not off the closings either, because that is very hard to track, and I think a big mistake other companies in our space have made. And then later on in our life cycle between now and honestly early next year, we're also going to be adding additional features for some of the third parties, title, escrow, insurance, not only to add impact, but also to do lead gen. So I imagine uploading your insurance and we can analyze that and say, well, we found a better quote for you. Or you didn't upload insurance and you said, I don't have anybody, I'm buying a new house. Would you like a quote? Same thing with title and escrow. When you're doing a refinance, we've got the lender in there. If they're usually the real estate agent's already chosen title and escrow, but to be able to, in the future, we'd like to actually integrate directly with some of these companies. And we're, again, in early conversations for strategic partnerships where we're having impact on them, saving them time and money, and the fact that we can do lead gen for them. And I think that there's just so many and there's so many things that we can do with this. And so it's really exciting what we've got planned over the next few years. It's not launch and do nothing. It's launch and we've got a ton of features to keep wowing everybody and really, spreading that gap and that barrier to entry if anybody that tries to copy or do anything close to what we're doing. It's like, great, you copied what we did yesterday, but guess what? We just came out with this. Big old middle finger. Try doing that too. All right, here's another one. Oh my God, these guys are nuts. So just keep coming with them. So we do have a big laundry list of features and vision around it, and has all been documented. So, yeah.
Okay, fantastic. So tell me about that. You already started talking about, that 5-year vision but tell me in terms of revenue and profits and things like that. Again, this is public, so we'll be more generic for people who want specifics. They can get in touch with us, but tell us what that sort of hockey stick looks like over the next 2 to 5 years.
Yeah, I mean, for us, it's like you said, it is a bit of a hockey stick curve, especially with particular partners that we're working with. So, as we're adding more lenders, as we're adding more brokers, usually that begets more of them. That's why going through this accelerator with this bank is very important, because it essentially creates a deal room for us to go to additional banks that have those really high-level requirements for certifications, even though if we've been following all the proper security protocols and making sure that all the data we have is safe, there's very expensive certifications that are going to be needed, which are very time consuming and distracting from us getting out more features. So that's part of the other reason for the capital raise, outside of adding on the right amount of sales and support staff to be on Zoom meetings on a regular basis for onboarding, support, and continued education, even just answering phone calls, things of that sort. Right. We do want to add a lot of features and be able to service as much of the industry as possible, as quickly as possible.
Okay. So a lot to do over the next few years. But I think, your future looks bright. I think you've already made tremendous progress, and I'm really excited to sort of have you on and have this conversation with you today. I think, we've gone through due diligence because of another angel group that I'm part of, and that we're definitely seriously considering investing in you. So we're excited about that opportunity and the opportunity to continue working with you. So we're looking forward to that. Any sort of last advice for, you are a success story. So any advice for startups that might be following you? They may be in different industries, different sort of, different life cycle in their different places in their life cycle. But advice for them to sort of learn from you?
I mean, my biggest thing that I would say is, if anything, feel free to reach out to me on LinkedIn. I try to give as much back and as much of my time as I can within reason. I do also enjoy sharing these experiences. So I actually do mentor at the UC Davis Entrepreneurial Academy. And yeah, I think don't let your ego get in the way. That's a big part of it. Yes. Ask for help. Don't try to do everything. If you're a technical founder, realize you're a technical founder and find somebody else to do the fundraising, find somebody else to do the operations, find somebody else to do legal. People who are the best at what they're doing. Right. And don't try to wear too many hats. You can't avoid it, but try to delegate out and get the right help and support and surround yourself with the right people.
Absolutely.
I think that's probably the biggest advice that's out there.
Fantastic. Well said. Well said. So Christopher, thank you very much for coming today, and we look forward to working with you in the future.
Thank you. I really appreciate it. Thanks for having me on.
No problem. Bye. That was great. I want to thank especially Christopher for coming on the show today and doing the interview. If you're an investor and are looking to invest in RealKey, please get in touch with me. My email address is on screen right now, and it's also in the description below. And if you're an entrepreneur, get in touch with us through our website. Our website is called startupsteroid.com. Click on the founder button and fill out the form there so we can get you added to our network, and hopefully you can be next on the interview. Thank you again for joining me today, and I look forward to the next one. Bye.